I'm going to give you a bunch of slices of investment wisdom. This all comes from the Market Manifest, which is a free report available at peterleeds.com. It's all a bunch of tactics showing you better strategies and approaches to your investing skills. So if you're a great investor, you'll become an even greater investor. If you're a newer investor, you'll get up to speed pretty quickly. Since it's going to get into a lot of trading tactics and techniques, I've got to do this right away. Nothing we say in this video is intended as personalized trading advice for you. I really want you to pay attention to this one, the low trading volume head fake. This is very important. And a lot of inexperienced investors completely don't understand this, and it costs them a ton of money. If a stock trades much higher, much lower, on very low volume, you can, to a certain degree, discount that move entirely. But if a stock trades much higher or much lower on significant volume, trading volume, then you can trust that that move is lasting and there's something behind the move that matters. A lot of times a stock will drop from $5 to $4, and it's on about $8,000 worth of shares traded hands. It's not a lasting move. That's one person or two people making a little trade. So don't read anything into it. There's also a lot of opportunity there. When you see a stock drop 50% in value on low trading volume, a lot of times, and you got to check it out seriously from head to toe, make sure that there's nothing going on there that you're missing. A lot of times that move will reverse, usually within hours or days at most. Whenever a stock's price moves, the trading activity demonstrates the strength and degree and sustainability of the action. You should be looking first and always at the trading activity of any stock. Everybody looks at the price. Great, we'll get to it, but look at the trading volume, especially when you're talking about a move in the stock price and you want to figure out what's going on. You want to be like a detective. If you want to know a move in the stock that just went up 25%, is that sustainable? Is that price going to maintain that level, or is it going to drop back? Look at the trading volume. What if $100,000, $1 million is making that trading activity happen? That's a move with some resilience. That's a move that you can put a little bit of trust in, some lasting sustainability, and that'll help you avoid getting out of a stock, taking a profit too soon. Stock goes up even 100%. You say, I'm going to take some profits. You look at the trading activity, it's not a dramatic amount. There might be something going on that's going to take that stock even up another 200, 300% from this point. You got to take a look at everything, and the first place you should look is always the trading volume. This video is inspired by the following testimonial. One of the best channels on YouTube, no ads as well. Brilliant in every way. That's from NV. Trading charts are a diagnostic tool. Use trading charts as a tool to understand the psychology of investors. If you've ever heard that before, you've probably heard it from me. I always use Japanese candlestick trading charts, and that's where people shut off their minds and they just don't want to listen to it. It's too complicated maybe. Some people think that. Okay, here's the reality. You need to be using Japanese candlestick trading charts. You can set up on whatever charting system you're using to allow for that. It shows you the psychology of investors. If you only use candlestick trading charts, you get an advantage that anybody looking at any other kind of trading chart does not have. And investing is all about the psychology of investors. Groups of people think there's an opportunity, that item or that asset increases in value because everyone's trying to get it. Japanese candlestick trading charts will tell you when investors are getting tired of the investment, when they're expecting it to go higher, when there's some uncertainty among investors. All of this is shown on the Japanese candlestick trading charts forever from this point right now, full stop. Always use candlestick trading charts no matter what, no matter what, no matter what. That's the one thing I'm going to tell you. Don't listen to anything else I ever said. You use candlestick trading charts, and when you know what the underlying psychology is, you know what investors are going to do next, and when you know what they're going to do next, you know how that's going to affect the underlying share price. People get intimidated by investing. One of the reasons I say it's not that complicated is because what is a stock? When you invest in stocks, you're investing in and trading slices of a company. And if you understand how a company works, you know whether or not it's going to do well. You can probably know that just by looking around you in the world when you go out to work, when you go to the restaurant. If a company does well, the share price very often follows suit. So don't worry about all this complicated investing stuff with this really high level technical analysis, all these programs and prices that you got to pay for things, real-time quotes. Don't worry about any of that. Start from a fundamental base of understanding how a company works, how they produce a profit, and what their financial situation is. What kind of opportunities do they have? Just remember that you're not investing in a stock, you're investing in a company. And if you think about it that way, your game to become a great investor is to have a great understanding of what makes a company successful or not successful. Always keep in mind that the media is reactive, not proactive. They're not telling you what's going to happen, they're telling you what has happened. When they say the price of gold is crashing, it's not crashing now, it has crashed. That's what they're talking about. That's why they're telling you about it. And they position it in a way that makes you think that it's happening right then. Think about it that way, because a lot of times you're going to want to look at media to get an idea about what to invest in, how a company is doing, how an industry is doing. Always remember that any media that you're seeing is just telling you what has happened, and it's not going to tell you what's going to happen next. You need to get into stuff like this YouTube channel and think for yourself and do more research to learn how to know what's going to happen next. And of course, you're going to use a lot of media coverage to create your premise. But just keep in mind that the media is just telling you about stuff that happened yesterday. That's why newspapers are covered in dust. The video doesn't end here. You'll see another video on screen right now, right there, and it's going to take you to right where we just left off on the last video.